Peter Eliades with you. This is Stock Market Cycles Update for the week ending Friday, September 24th, being recorded Saturday, September 25th. This update is going to be for both those that watch on YouTube and for our own paying subscribers who get these updates every single day. We think you'll find great value in getting them every single day, and if you're interested in doing that, simply go to our website. We'll put a link to the website down below today's YouTube video. Something else I'd like to ask as a favor too, if you're enjoying these or if you get any benefit from them, please take the time to give us a thumbs up underneath, because that helps us significantly with the YouTube, and it helps to offset some of the negative. I don't know where these negatives are coming from. I don't mind people giving a thumbs down, but at least explain to us why. I think we're providing a great service here with potentially very useful information, and I guess there are just some people that don't like what they're hearing, so they give us a thumbs down. If you will take the time to give us a thumbs up if you're getting anything at all out of these updates, I would really appreciate that. Let's start reviewing, and there's a lot to go over. This is where I did my last update that I shared with YouTubers. Okay, so we've had this long period of time here. I said at the time that I thought it might be the most important update I have ever done. And that's because I felt that the market was in a position to be forming a very major top. Tops are not easy to call. I've called a few in my lifetime, and I've blown a few calls in my lifetime too. I've called some tops prematurely. I think virtually everyone has. It's in this business. But it's surprising the number of tops you can call when you use the cycle analysis in concert with good technical analysis. Cycle price projections, technical analysis. They go together like a hand and glove. And again, I point out this is where we did the update, saying we thought we were forming or had formed a very important market top. Now, nothing has been proved so far. We had a nice decline. This was about a 4% decline on a closing basis, but we've had a really good rally come back in the last couple of days too. So this is what we're looking at. But I made a remarkable discovery over the weekend and kind of stumbled upon it. It was what you might call serendipitous. Great word. It's kind of finding something when you're looking for something else, or searching at, looking at other things and discovering something you weren't even looking for. And that's what happened this weekend. An incredible discovery. I'm going to share it with you now. We're going to get into price projections, but I think this technical side of it is even more than the price projections now, and I don't too often say that. So let's get started right away and take a look. Before I do that, one quick thing on this chart before I leave it. Those of you that have been watching on a regular basis know that I've talked about the George Lindsay bottom to top counts. And I'm always looking for those. They don't work all the time, and you've got to keep an eye out and see what indeed comes up. But this is a possibility here. This is the low that occurred. This is a closing price chart on the S&P. This low occurred on December 3rd of 19. And if you look at the number of trading days, 228 trading days from that December 3rd of 19 low to this low that occurred on October 28th of 20. 228 trading days between the two. If you go 228 trading days forward, it takes you to Friday in the market. So could this be a bottom to top count? It's a possibility. Let's keep an eye on it. Okay, let me show you the real incredible discoveries that I made this weekend. I think you will be impressed with them. You should be impressed with them. This is a weekly chart of the S&P 500 cash index. I'm making a point to tell you it's on an arithmetic scale. Now, technicians may argue about what's more important, an arithmetic scale or a semi-logarithmic scale. They call them semi-logarithmic because the only one that's logarithmic is the vertical axis, the price axis. The time axis is not logarithmic at all. It's simply a linear scale of time. but the right-hand scale is logarithmic. This one is not. This is the arithmetic scale, and I want you to take a look at it because I'm always playing around with channels, and this is one that I played around with this weekend. Take a look at this. This goes back to the exact low week in 2009. Let's zoom in on that so you can see it. The week ending March 6th of 2009 is where this trend line begins. It's going to start out simply as a trend line between two very important bottoms. The next low is the one that occurred March 27th of 2020, the week ending March 27th, okay? So what we're looking at now is the exact weekly low on an intraday basis in 2009 and the exact weekly low intraday basis 2020. Well, I looked at that this weekend and I said, wait a minute, did I ever draw this parallel channel in here? Because we're looking at three of the most important turns of the last 2 decades. This high in 2000, this low in 2009, and arguably this incredible low in 2020 that has led to a straight-up rally, one of the great rallies in market history. I mean, look at this. Day after day, week after week after week, this thing started back in April of 20, and we're now into September of 21. We're talking about 17 months of rally, virtually straight up, okay? But what happens if we look at the parallel channel? Well, where did I start? Let me zoom in and show you. I started at the all-time high in March of 2000, the week ending March 24th. This is on the S&P, mind you. Both the S&P and the over-the-counter composite topped out in March of 2000. The Dow topped out in January. But this is an S&P chart, and this is exactly where the high was in the week of March 24th, 2000. Just before a decline of 55 to 60% in the S&P and virtually an 80% decline in the NASDAQ, okay? So very important top. Let's zoom out again. So I put that line in and I looked here and I said, oh no, my goodness gracious, look at this. And let's do that. Let's look at this. Here is the upper part of the channel. We hit it for the first time the last week in August, the last full week in August, and then reached our all-time high where I did that update saying this could be the most important update I've ever done. Overshot that line by a little bit, certainly not by much. If you look at the whole overall picture, you're talking about the line being around the 45.12 level, and the prices got up to 45.46 rounded off. Little over 30 points above the trend line. I'd rather see that. I'd rather see that overshoot, that extreme move to the upside after the market had gone up for so long. And we saw it. And what happened from there? Boom, huge down week. Continuation here. I shouldn't call that a huge down week. It looks big now because we're doing a zoom. But it was a good down week and a good down week. And then this huge down week going into Monday of this past week and a huge rally at the end of it. So this is the setup for the serendipitous thing that I wanted to show you that I stumbled on. This again is an arithmetic scale chart, a weekly chart of the S&P. What about a logarithmic chart? What is the difference? Well, I think most of you know, but for those of you who don't, arithmetic charts are exactly what they state. They chart the stock or the average by an arithmetic number. The problem is, for some people, that if you go from 10 to 20 on a stock, that's 100% with only 10 points. If you're up here at 4,000 and you go 10 points, that's not anywhere near 100%. It's much, much less than that. So one would argue that you can't judge by an arithmetic scale what a move is like, because this move that we see here of this great magnitude, if we took the same percentage move all the way back here, it would look completely different. Let me show you what I mean. I'll show you a logarithmic chart. Okay, so you can see this is a big move here, but we had a big move back here too. If you remember from the chart I showed you arithmetically, this move looks hugely bigger than this one down here because of the differences in terms of price and percentages. This is a percentage chart. So a 100% move down here at prices around the 600 level is going to be the same vertical distance as a 100% move up here. But here's what I noticed in this chart. I had kept this trend line. In fact, I wouldn't be surprised if I've shown it to you sometime over the past few years on our video updates, because it was a fabulous trend line. And let me click on the line and show you what the anchors are for it. The begin date is April 30th of 2010, and the end date is December 26th of 14. So those are these two little squares here. Here's the 2010 top, and here's the 2014 top. So how important was it? Well, look at this. This was a top, and this was a top. So they defined the line. Hit the line here, hit the line here, hit the line here, here, whole bunch of weeks here, and here finally where we defined the line, and then sideways to down, little rally and down. So by this point, you could maybe argue, well, we're halfway down into the channel, but it appears as if there's a pretty good chance that the top has been seen. But look what happened after that. Really good rally coming into 2018. It approached the line but never got there. A nice decline, an even bigger decline, and then another big rally. This rally which began in December of 18, the Christmas bottom that we saw in 2018, another really good rally. And then this decline, which was the largest percentage decline in the smallest period of time from an all-time high in history. You don't usually get this kind of crash-like decline from an all-time high. You usually come down and have a second wave up, and then the third wave, is the one to the downside, is the big one. Not here, straight down. But look at this. Here's the exciting part. From this low, and I'll tell you why I drew this line in right here in a second. It's not important right now. The important line is the top line here. We came all the way up, approached that line. If you had told me down here that we were going to come up and meet this line again, I'd tell you were crazy. I mean, it wasn't in the projections because we hadn't started to move up yet, even though the projection was almost perfect for these highs up here in the S&P. But there's no way down here you could have foretold this kind of move. Look at this. Look where it stopped. It stopped right at the high, at the September high. Now, I would zoom in on this for you, except that doing a zoom on a logarithmic chart in TradeStation screws the whole thing up. You'll lose this line completely. It will not retain its accuracy in terms of where it is. What I can tell you, though, is that on a logarithmic basis, and you can calculate these logarithmically with a calculator, this on the September 3rd high, which was a high, I'll tell you momentarily here, was the week of September 3rd, and the high for that week was 45, 45, 85. I believe this logarithmic line was a little bit higher than that. It depends which one of these highs you use down here. I mean, you could set it up so it hit it exactly. But let me zoom in on this part here because I don't think you'll lose the accuracy when you come in here. Well, you may. No, so here you go. See how we got up close to it here, got up to it, hit it, hit it, hit it, hit it, hit it, came close to it again. So depending on which one of these lines, you could use any one of these highs to define the trend line, and depending on which one you use, it would tell you exactly where you got here in the September high, okay? So, what have we done? Well, for both of our charts, we've looked at the time period from the 2009 low to the 2020 high. One of them, the arithmetic one, we did a parallel channel. On this log chart or semi-log chart, all we did was a tops line. This remarkable tops line, when I saw this weekend, I said, oh my God, look at this. We came right up to that line. So on both an arithmetic and a semi-log chart, this incredible rally reached them both at virtually the same time. I've never seen that happen before in a long-term chart. Now, mind you, there are different points that were used. On the arithmetic one, we came all the way back here to the 2000 high. And because, as I explained to you, arithmetic moves are different than logarithmic ones, this worked out perfectly. But the remarkable thing is that on both a semi-log chart and an arithmetic chart, these trend lines, one of them being a tops line to a channel, the other one simply being a tops line, came up and reached this point almost exactly in September. Okay. What I did here was I said, is this a channel also? Well, it's not a perfect channel. If it were a perfect channel, I've drawn what would be a perfect channel in here. Okay. So this move to the downside came down too far to make this a perfect channel. I'll zoom in here and show this to you. If it had stopped here at around 2403, I think is the number, 2403.03. In fact, I wrote it down on the graphic here. Here it is, 2403.03 is a perfect log parallel. That would make this line parallel to this line. And you can see where you almost got that. There were only 2 weeks that went below this line. So these are two remarkable charts. I almost can't believe that they turned out this way. This one using logarithmic scales, this one using an arithmetic scale, and both saying, hey, you could be at the end of this remarkable move in the stock market. Let me show you something else. Do you remember the update that we did sometime in the last year, I can't tell you exactly when, that spoke about how important 150-month sequences are in the market? It could be a top to a top, a top to a bottom to a top, a bottom to a bottom, but 150 months, 12 and a half years, give or take, let's say a couple of months, 3 at the most, has been incredibly pervasive throughout market history. Let me go back on this chart for you. This is, by the way, a Dow Jones Industrials chart. See those red lines? All the red lines? All those red lines join important turning points in the market, and virtually all of them are 150 months plus or minus 3 months. How important are they? Well, this one is the 1929 high right here, and this one is the 1942 low. Those are two of the most important turning points back in that time period between the late 20s and the early 40s. I'm not going to go through them all with you, but I want to assure you how important a lot of these 150-month sequences have been. Okay, how about 1974? Well, here's 74 here. If you go to the 1987 high prior to the crash, 152 months. If you go from that high, the pre-crash high, to this high in January 31st of 2000 on the Dow, very important high, led to a 40+% decline. That's exactly 150 months, 149 months. So that's how important the 149 is. Look at this one right here. This is from the low in July of 96 to the very, very important low in March of 09. I mean, these sequences of 150 months between important market turning points have been amazing. Well, why do I bring that up? I think you know why I bring that up. This is probably one of the more important lows certainly of the last 20 years, and maybe longer than that, the March of 09 bottom. If you click on that, 149 months takes you to, this one says August. See where it says end date in that box? So it's on August, but actually we reached the higher high in September. So from the March of '09 bottom to the September of 21 high is exactly 150 months, like so many of these other incredibly important market turning points. So that's one more feather in the cap of the potentially very bearish case. Okay, you can probably tell I'm very excited here. Let's look at projections. Now, let me warn you ahead of time. We have some higher projections. In fact, I can show you projections that lead to new highs. I don't think those are going to happen because of the potential importance of what I call the Labor Day highs. But it's possible. It is possible to get up to this line again, or the line that I showed you on the arithmetic scale, get up to that again, somewhere probably between, let's see, this high on September 3rd. As I said, we got up to a high of, actually this is on the Dow, so I can't quote you those figures. But on the S&P, 45, 35, 38, okay? So could we go to 45, 40, or 50, or 60, or 70, or 80? Yeah. But beyond that, I don't think so. In fact, I don't even think we'll get up there. I think there's a decent chance that we turn immediately on Monday and go down again. And I'll show you something to watch right now. We showed this to our subscribers a day or two ago. Let's take a look at it. Okay, we could do this with the NDX, but we're going to do it with the futures. The symbol is @NQ, which is a NASDAQ 100 future. And we put in @NQ, which includes Globex. In this case, I don't think it would have made any difference at all. If so, very minor difference. But here's what's important. Let's take a look at the short-term pattern here. Okay, here's the all-time high. This is a daily chart. All-time high September 7th. So on the S&P, the all-time high came the day before Labor Day, and on the NASDAQ, it came the day after Labor Day, September 7th, okay? But look at this formation. This is potentially important. We called this to the attention of our subscribers on Thursday of this week. That's this bar right here. There were three things happening, three lines, three technical lines. One of them was a tops line that goes from the high of July 26th through the high of August 5th. And watch what happened after that. It's a little tops line that comes here. We broke above it, decisively above it, pulled back to it, and then had another big move above it. Then what happened? Well, we broke down to it again, had another rally up to it, and then slightly broke it on September 17th, and on the following Monday, which is Monday of this past week, we gapped beneath it and came way, way down. This is not a gap here because it includes Globex, but on the chart, the daytime only chart, there's a pretty big gap in here. Well, big deal. Monday way down, Tuesday rallied a little, Wednesday rallied more, Thursday rallied again, and this is when we did our update showing the three lines here. We showed you one of them. Here's another one, the blue line. We showed you the green line. The blue line is this line right here. It's a simple, you could make an argument that there's a tiny little head and shoulders here. This is the left shoulder up here. We came down to the neckline, rallied up to the head, came down to the neckline again right here on this date of September 15th, and had another little rally up here to the right shoulder, and then broke boom below. So if this is the neckline, follow it forward. We broke it decisively and then rallied back to it from underneath. That is a common technical expectation, okay? So, and look how the blue line almost overlays the green line, okay? So they're almost on top of each other. They're certainly virtually parallel to each other. And that's where prices came up to Thursday. A little bit of a run above. On Friday, exactly up to those two lines. What's this third line? Well, let's take a look. Go back a little further. This is the low of May 19th, back here. I have a feeling my head might be in the way, and I've got to be careful of that. This is the low right here, the low of May 19th. You put it through the obvious low of August 19th, and what do you see? Well, this is the Monday break. Broke decisively below that trend line. 1 day, 2 day, third day rally right here. This was Thursday of last week, right up to the line. That was at the same time coming up to these two lines, and Friday could get no higher. Friday closed pretty close, pretty near the high of the day, and could not get above the Thursday high on Friday, and came up to these two lines again, didn't quite make it up to this uptrend line. So that's another reason why I think there's a chance of turning down immediately from here, okay? All right, let's take a quick look at some projections. This is virtually the only index where we have a downside projection that has not been met. And even that I'd be a little cautious about, because you can see how close it was to not getting the mid price of the bar getting below the offset line, just by a tiny bit here. And we rallied back strongly to close near the highs of the week. So we could quickly, if the market does decide to go up again towards the highs, we could quickly invalidate this projection just going sideways all week this week. But this remains the downside projection that remains in effect coming into this week. The rest of them have been met, and we're getting some very short-term upside projections. I'm not going to show you those upside projections now because this has been a long update. If we start breaking through above these three lines here, then I could very easily be doing some kind of special update on Monday and telling you what I see and what the possibilities are for upside projections. But let me emphasize, even if we see upside projections again back towards the highs, remember those two trend lines. They are telling you in no uncertain terms that they think this market has used up all the gasoline in it and that we're approaching or at a very major high. Okay, I've been kind of a hurry here. I wanted to cover a lot of things. I hope I covered the most important things. I hope this has been helpful for you. Again, I ask you, I urge you, if you find any value whatsoever in these updates, please give us an up arrow, give us a like, because it's very important to us, especially in the last update we did, which was spectacularly accurate, right at Labor Day. It got like 9 or 10 or 12, thumbs down on it. Don't ask me why. I don't mind if you give us a thumbs down if you have a legitimate reason for it. But if you do it just because you don't like what we're saying or you don't agree with us, I would urge you not to do that. Anyway, thank you very much for watching. Please give us a thumbs up. Give us some favorable commentary. And for our regular subscribers, we'll be talking to you again on Monday of this week. Thanks for watching.